When markets crash, most lose their money, but some lose something even more valuable, their peace of mind. 2,000 years ago, a man faced chaos greater than any financial storm, war, betrayal, and plague. His name was Marcus Aurelius. He didn't have charts, trading bots, or breaking news alerts. What he had was discipline, the power to remain calm when the world was falling apart. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." Marcus would have agreed, because patience isn't just waiting, it's strength under control. Every crash tests more than your portfolio. It tests your philosophy. Can you remain rational when others panic? Can you master your emotions when fear dominates the headlines? Marcus wrote, "You have power over your mind, not outside events. Realize this and you will find strength." Today, let's uncover how the timeless wisdom of Stoicism can help you not only become a better investor, but a calmer, wiser human being in a world addicted to noise. Chapter 1. The Market and the Mind. When the market trembles and every screen turns red, something deeper than money begins to slip away: peace of mind. Headlines scream, panic charts collapse, and fear spreads faster than any algorithm. Yet in the middle of this chaos, a few investors remain still, as if untouched by the storm. 2,000 years ago, a man named Marcus Aurelius faced chaos far greater than any financial crash, war, plague, betrayal. He left us one line of guidance: "You have power over your mind, not outside events. Realize this, and you will find strength." The stock market is not truly a place of numbers. It is a battlefield of emotions. Every candle on a chart is a human heartbeat: greed, fear, hope, despair. Research from Dalbar Inc. shows the average investor underperforms the S&P 500 by more than 4% each year, not because of poor strategy, but because of poor psychology. Marcus once wrote, "The happiness of your life depends upon the quality of your thoughts." He faced empires collapsing, yet trained his mind to remain calm. In truth, the real opponent in the market is never another trader. It is your own impulse. Fear tells you to sell everything. Greed whispers to double down. In 2008, when Lehman Brothers fell, fear ruled the globe. But those who acted with calm rationality, like Warren Buffett, investing in Goldman Sachs, earned massive rewards years later. Buffett said, "Be fearful when others are greedy, and greedy when others are fearful." That, in essence, is Stoicism wearing a business suit. The Stoic investor doesn't chase emotion. He observes it. He knows fear and greed are weather patterns of the mind. They come and they go, but the wise remain unmoved. As Marcus reminded himself, if you are pained by external things, it is not they that disturb you, but your own judgment about them. Imagine a young trader named Ethan. Every morning at 4:30 a.m., he wakes, scans futures, and feels adrenaline surge. Each loss cuts deep. Each win feels like victory. His mentor gives him a small book, Meditations. Ethan laughs at first. What can a Roman emperor teach me about Wall Street? Weeks later, when the market crashes 10% in a day, he opens the book again and reads, "You must learn to stand upright by yourself, not be held upright by others." That line changes everything. He stops checking prices every 5 minutes. He starts checking his mind instead. Slowly, both his portfolio and his peace begin to grow. The first lesson of a Stoic investor is simple: control the controllable. Before the opening bell, take 3 minutes of silence. Close your eyes, breathe deeply, and ask, what can I control today? What is beyond my control? Write the answers down. You will find that only your thoughts, your actions, and your attitude truly belong to you. The Stoics called this the dichotomy of control. Modern psychology calls it cognitive behavioral training. Different words, same wisdom: calm through clarity. Harvard Business Review found that mindful investors reduce emotional trading errors by 23%. Awareness slows reaction. Marcus did the same before every battle. He wrote, "Today I shall meet people who are meddling, ungrateful, arrogant, yet none of them can harm me." He was preparing his mind for volatility. You can do the same each morning before the market opens. October 19, 1987, Black Monday. The Dow Jones fell 22% in one day. Traders wept, some collapsed. But one investor, Sir John Templeton, calmly bought 120 different stocks. He believed panic was temporary, but value was eternal. 3 years later, he had doubled his fortune. Templeton said, "The time of maximum pessimism is the best time to buy." Marcus would have nodded, Does anything truly bad happen to a man who acts with virtue and reason? After each trading day, keep a short journal. Ask yourself three questions. What triggered my emotion? How did I respond? How could I respond more rationally next time? Over time, you'll notice a pattern. Markets repeat their cycles, and so do your emotions. Observation is liberation. The more you watch your mind, the less it controls you. Many believe that more research, more data, or faster trades can control outcomes. But Marcus warned, what we do now echoes in eternity, yet outcomes are never ours to command. Even with artificial intelligence and algorithms, markets remain chaos disguised as order. A Stoic doesn't fight chaos. He flows with it. He studies, prepares, acts with discipline, and lets go. That release, the willingness to accept what comes, is the highest form of strength. During the 2020 pandemic crash, the VIX index, the so-called fear gauge, spiked to 82.7, the highest since 2008. Retail investors sold everything. Yet within 6 months, markets recovered more than 35%. Patience won again. Charlie Munger once said, "The big money is not in the buying or the selling, but in the waiting." Waiting, quiet, unglamorous, unpopular, is a Stoic virtue made visible. Think of your mind as a stock exchange. Every thought is a trade. Fear and greed compete for dominance. The Stoic investor learns to hold the shares of reason and sell the shares of impulse. When you observe your thoughts without judgment, you realize that peace is not found in prediction, but in preparation. Each night, review your inner market. Ask yourself, what events tested my composure today? Did I act from virtue or from emotion? What lesson will I carry into tomorrow? Marcus wrote his meditations as private reflections, not public speeches. You can do the same. Over weeks, you'll see your emotional volatility decline, like a steady market after a storm. Remember, the market never punishes you for being wrong. It punishes you for being emotional. And that brings us to our next step. In Chapter 2, we will explore the three virtues that define every Stoic investor: discipline, focus, and acceptance, the mental weapons that turn chaos into clarity and volatility into wisdom. Breathe, stay calm, and prepare to master them. Chapter 2. The Stoic Investor's Three Virtues. When markets rise and fall like ocean tides, when greed and fear pull traders from reason to panic, one truth remains constant. It is never the market that defines your success. It is your mind. Marcus Aurelius once wrote, "Waste no more time arguing about what a good man should be. Be one." For investors, the message is simple. Stop talking about calm. Become calm. Stop seeking discipline. Live it. Because a Stoic investor is not born from luck or timing, but from virtue, there are three timeless virtues that shape this path. Discipline over emotion, focus on process, not outcome, and acceptance of uncertainty. Together, they form the compass of reason in the storm of volatility. Let's begin where all mastery begins, with discipline. Discipline is the quiet strength that keeps a hand steady when the heart shakes. The average investor doesn't lose because they lack knowledge. They lose because they lack control. When prices fall, emotion surges and logic fades. Marcus reminded himself daily, "You have power over your mind, exercise it." That power is discipline. In 2022, when the bear market clawed through portfolios, over 40% of retail investors sold near the bottom, according to data from Charles Schwab. Yet those who stayed disciplined, rebalancing slowly, trusting long-term plans, recovered within a year. Discipline is not the absence of feeling. It is acting according to principle, not impulse. Epictetus taught, first say to yourself, what you would be then, do what you have to do. That is the essence of trading with virtue. Picture a young trader named Maya. Her rule was simple: never trade on major news days. When inflation numbers exploded across every headline and the market plunged, she felt her pulse race. Her fingers hovered over the keyboard, ready to sell. Then she paused. She breathed. She waited. A week later, the market stabilized. She had protected not only her capital, but her calm. That pause, that moment between emotion and action, is where fortune hides. Psychologists call this the 10-second rule. When emotion spikes, take 10 seconds before acting. It rewires the brain, cutting the circuit between fear and reaction. Marcus practiced the same ritual before dawn each day. He rehearsed adversity in his mind so that when chaos came, he was already calm. So here's your first exercise before each trading session: write your personal rules. When temptation comes, read them aloud. Discipline is not built by comfort, it is built by consistency. Every time you honor your rule, you strengthen the muscle of reason. Now, discipline leads naturally to focus, the second virtue, because once your emotions are steady, you can finally direct your energy with purpose. Most investors obsess over outcomes, profits, losses, likes, rankings. But Stoics measure success by one thing: right action. Seneca wrote, "He who is brave is free." In the markets, bravery is not recklessness. It's faithfulness to your process when the crowd mocks you. You can do everything right and still lose money in the short term. That's probability, not punishment. A strong process is the only edge that endures. JP Morgan's data over 30 years shows that missing just the 10 best market days cuts total returns by half. And why do most investors miss them? Because they panic, they sell, they chase noise. Those who stayed invested, who trusted their process, doubled their wealth. Focus on process, not outcome. Marcus would say, do what nature demands of you and do it now. For an investor, that means study, plan, act, and release attachment to results. Success is in the doing, not in the scoreboard. Consider another story. In 2019, a quiet fund manager named Luis stuck to his dollar-cost averaging plan as markets slid 15%. His colleagues laughed, calling him stubborn. But when recovery arrived, his portfolio outperformed them all. His secret wasn't luck. It was loyalty, loyalty to his method. Try this after every trade instead of writing profit or loss record, process kept or process broken. Track it for a month. You'll start to measure yourself not by numbers, but by integrity. And integrity, like capital, compounds. Still, even the most focused mind must face the final virtue: acceptance of uncertainty. Because no matter how wise you are, the market remains a mystery. To fight uncertainty is to fight life itself. Marcus wrote, "Accept the things to which fate binds you, and love the people with whom fate brings you together." To a Stoic investor, that means loving the volatility, respecting randomness, embracing the unknown. In March 2020, when the pandemic froze, the world $18 trillion vanished from global markets within weeks. Panic ruled the air. Yet those who accepted uncertainty, who stayed invested, diversified, and patient, saw their portfolios surge back stronger by year's end. Acceptance is not surrender. It is composure in chaos. The Stoic doesn't say, "I will never lose." He says, "When I lose, I remain whole." Think of Daniel, a veteran who lost half his fortune in the dot-com crash. He didn't curse the market. He studied it, adapted, and re-entered with calm. He lived by the phrase, "Amor fati, love your fate." 2 decades later, he had rebuilt not only his wealth, but his peace. Acceptance had turned pain into wisdom. To practice this, end each week with reflection. List 3 unexpected events that shook your confidence. Next to each one, write what you learned. Gradually, randomness becomes your teacher, not your tormentor. And so discipline steadies you, focus guides you, and acceptance frees you. Together, they form the foundation of a Stoic investor, a tripod of stability. Remove one leg and balance collapses, but nurture all three, and even the fiercest volatility becomes manageable. Behavioral finance studies from the University of Chicago reveal that investors who master emotional regulation earn up to 7% higher annual returns than those who don't. That difference isn't strategy, it's psychology. The calm mind compounds just like money does. Marcus Aurelius wrote, "The impediment to action advances action." What stands in the way becomes the way. Every loss, every challenge, every sleepless night staring at red charts, these are not barriers. They are your training ground. You cannot escape difficulty, but you can redefine it. So ask yourself, what if every market crash were simply a mirror showing where you still lack peace? What if each failure were the universe whispering, "Grow here"? That is the Stoic lens life, not as punishment, but as practice. Ray Dalio once said, "Pain plus reflection equals progress." The Stoic investor doesn't flee from pain, he transforms it into insight. And when you begin to see your journey that way, something shifts, the noise fades, the rush slows. You begin to trade not from fear, but from freedom. Because the market is never your enemy. Your reaction to it is. When others panic, you breathe. When others chase, you wait. When others despair, you learn. Discipline gives you control. Focus gives you direction, and acceptance gives you peace. Wealth is not the number on a screen. It is the calm of knowing that number no longer controls you. Marcus once wrote, "If you seek tranquility, do less or do what is essential with less distraction." Let your investing mirror that wisdom. Do what is essential. Avoid distraction. Be unshaken. And as you internalize these three virtues, feel how they reshape not only your portfolio, but your character. Because in truth, the goal is not just to profit from the market, it is to master yourself within it. Now take a deep breath. Let the noise settle and prepare for the next step. In the following chapter, we'll travel through time and imagination to see how Marcus Aurelius himself would build a modern portfolio, not driven by hype, but guided by harmony, reason, and the eternal principle of logos. Stay with me, because the philosophy of patience is about to become a strategy for prosperity. Chapter 3, The Modern Stoic Portfolio. Imagine if Marcus Aurelius were alive today, not as an emperor commanding legions, but as an investor navigating a world of screens, charts, and endless noise. Would he chase meme stocks? Would he panic during a crypto crash? Would he try to time the market? Of course not. He would build what we now call the modern Stoic portfolio. Because while the tools have changed, human nature has not. Markets are faster, information is infinite. But emotion is the same. Greed, fear, envy, they rule traders now, just as they ruled senators in ancient Rome. Marcus would smile quietly and remind us, the things you think about determine the quality of your mind. So what would a mind trained in Stoicism do with money today? Let's find out. The Stoic portfolio isn't built on prediction. It's built on principles, simplicity, patience, and rational order. It's not a collection of assets, but a reflection of character. Because to invest like a Stoic means to treat wealth not as an idol, but as a tool. Money serves virtue. It never commands it. Marcus Aurelius once wrote, "Wealth consists not in having great possessions, but in having few wants." That line is the heart of Stoic finance. It's not about maximizing returns. It's about minimizing regret. It's not about chasing every opportunity. It's about mastering yourself so you can choose only the right ones. Let's start with the first principle, simplicity. In a world obsessed with complexity, simplicity is rebellion. Most investors drown in information news, opinions, algorithms, forgetting that the greatest returns come from clarity, not chaos. Warren Buffett once said, "The best investment is the one you can explain to a 10-year-old. The Stoic would agree. He'd build a portfolio of things he understands deeply and trusts for decades. Data from Vanguard shows that a simple 60-40 portfolio, 60% stocks, 40% bonds, outperformed the average actively managed fund over 85% of the time in the past 25 years. That's not luck. That's simplicity beating noise. Marcus would call it acting in accordance with nature. Nature doesn't rush, yet everything gets done. Your portfolio shouldn't rush either. So the first rule of the Stoic portfolio, keep it simple enough to stay consistent. If it's too complex to explain calmly, it's too fragile to survive chaos. Now, once simplicity anchors your structure, patience becomes your shield. Because in Stoicism and in markets, time is not your enemy. It's your ally. Benjamin Graham, the mentor of Buffett, said, "The investor's chief problem, and even his worst enemy, is likely to be himself." And the Stoic would add, the cure for that problem is patience. The data proves it. If you had invested $1,000 in the S&P 500 in 1990 and simply left it untouched by 2020, you would have over $20,000, even with crashes, wars, and recessions in between. That's the silent power of patience. The Stoic investor understands that compounding doesn't only grow money, it grows wisdom. Marcus wrote, "Time is a sort of river of passing events, and strong is its current. To flow with it rather than fight it, that is true mastery." But patience is not passive. It's not sitting idly by while fate unfolds. It's active endurance, steady commitment to process, consistent review, humble adaptation. The Stoic investor acts without attachment, reviews without regret, and rests without anxiety. That brings us to the third principle, rational order logos. In Stoic philosophy, logos means the rational structure that governs the universe, the harmony beneath apparent chaos. A Stoic investor builds his portfolio to reflect that harmony. He diversifies not because he fears loss, but because he understands impermanence. He rebalances not because of panic, but because of principle. He sees volatility not as danger, but as nature doing its work. In practice, the modern Stoic portfolio might look like this: a foundation of broad market index funds to reflect the collective wisdom of the economy, a modest bond allocation to protect against short-term storms, perhaps a touch of real assets, property, commodities, or innovation to stay grounded in reality and growth. No extremes, no speculation, no drama. It's not a gamble. It's geometry, balanced, elegant, and calm. As Seneca said, luck is what happens when preparation meets opportunity. Preparation is your diversification. Opportunity is time. Luck is simply the harmony between them. Let's turn this philosophy into practice. Here's your Stoic exercise for this chapter. Once a month, review your portfolio and your emotions separately. Ask yourself two questions. Has my financial position changed, and has my state of mind changed? If only the second has changed, if the market is the same, but your feelings aren't, it's your mind, not your money, that needs rebalancing. And remember, numbers never move first, emotions do. When panic hits, breathe before you click. When greed whispers, wait before you act. Your returns depend not on prediction, but on perception. Marcus would sit beneath the stars and write, "Observe how all things change quickly and be prepared to let them go." He was speaking of life, but he could have been describing investing. Because in both, everything is temporary profits, losses, trends, and even fear. The Stoic investor accepts impermanence. He doesn't tie identity to market performance. He doesn't compare his path to another's. He knows that peace cannot exist where envy lives. Epictetus once told his students, "If you want to improve, be content to be thought foolish." In modern markets, that means having the courage to ignore the crowd. While others chase hype, you chase wisdom. While they trade noise, you cultivate patience. And when they finally tire of the chaos, they'll look at your calm and call it luck, but you'll know it was discipline. The Stoic portfolio is not only an investment strategy, it's a philosophy of being. It teaches that true wealth is the ability to stay composed when the world is not, that your greatest asset is not your capital, it's your character. Hey, let's bring this to life through a story. In 2020, amidst the pandemic panic, a small investor named Lena decided to invest every month, no matter the headlines. Her friends laughed. Markets crashed, then soared, then crashed again. But Lena never stopped. 2 years later, her steady contributions had grown more than she imagined. She realized something profound: she hadn't just built wealth. She had built resilience. Her account balance was larger, but her peace of mind was immeasurable. That is the true return of a Stoic portfolio. Now think of your own strategy. Are you building wealth or anxiety? Are your investments a reflection of wisdom or reaction? The difference is invisible to the eye but obvious to the heart. When you simplify, you create clarity. When you wait, you create strength. When you act rationally, you create order. These are not just financial virtues, they are human virtues. Marcus wrote, "Just that you do the right thing. The rest doesn't matter." So build your portfolio on what's right: right principles, right patience, right peace, and let the rest follow naturally. And when the next crash comes, as it surely will, you'll no longer see it as disaster. You'll see it as a test, an opportunity to practice the philosophy you claim to believe. Because the Stoic investor doesn't seek to predict the market, he seeks to predict himself. That's the difference between a gambler and a philosopher. The gambler reacts to everything. The philosopher reacts to nothing. So the next time screens flash red, remember this: you are not your portfolio. You are the calm behind it. You are the reason it endures. You are the logos in the storm. Take a deep breath. Look at the chaos and smile. Because you know something most investors never learn: that true success is not about timing the market, but about mastering the mind that faces it. And as we step into the final chapter, remember this feeling, this clarity, this strength, this peace. Because next, well, discover the ultimate Stoic lesson from Marcus Aurelius himself, not about money, but about meaning. We'll explore how to turn wisdom into daily practice, and how calm thinking can lead not only to wealth, but to a richer life. Stay with me, the Emperor's final teaching awaits. Chapter 4, A Lesson from the Emperor. There comes a moment in every investor's journey when numbers stop speaking, when charts blur, profits fade, and you begin to wonder what all the chasing was really for. It's in that silence between the rise and fall of markets that the final lesson of Marcus Aurelius is heard. It's not about money, it's about meaning. Near the end of his life, as the Roman Empire trembled under war and plague, Marcus wrote one final reminder to himself. It is not death that a man should fear, but never beginning to live. Those words echo through centuries, and if we listen carefully, we realize he wasn't only speaking of life. He was speaking of every risk we avoid, every dream we delay, every opportunity we let fear erase. The modern investor calls it paralysis by analysis, the endless waiting for perfect certainty. But certainty never comes. Marcus understood that. He faced battles where every choice could mean life or death, yet he acted calmly, deliberately, without regret. He trusted principle more than prediction. And that's the emperor's final gift to us: act with virtue, accept the outcome, and keep your peace. Think of how this applies today. A study by Fidelity once found that the most successful accounts on their platform belonged to people who had forgotten they even had accounts. In other words, those who interfered least prospered most. The Stoic would call that living in harmony with nature. Nature doesn't force outcomes, it allows them. In markets and in life, the emperor's wisdom is the same: do what you can, let go of the rest. Or as Marcus phrased it, if it is not right, do not do it. If it is not true, do not say it. He measured success not in victories, but in virtue. And maybe that's what we all need to relearn. Picture this: a young analyst exhausted from endless trading burns out. He's made money but lost meaning. One night he stumbles across Meditations and reads, "The soul becomes dyed with the color of its thoughts." He closes the laptop, steps outside, and feels something he hasn't felt in years: stillness. In that moment, he understands the market was never the enemy. His own unrest was. He begins again, slower, wiser, freer. That's what Marcus meant by living. Every investor faces two markets: the external market of price and the internal market of peace. Most master the first, few master the second, but only the second guarantees lasting success. So how do we practice it? Start with gratitude, a principle Marcus used daily. Each morning he reminded himself, when you arise in the morning, think of what a precious privilege it is to be alive, to breathe, to think, to love, to invest your time wisely. Before you check your portfolio, check your perspective. If your first thought is gratitude, volatility loses its power. Next, practice reflection. At the end of each day, write 3 lines. What went well, what did not, and what did I learn? That's not journaling, that's training. It's how you transform emotion into education. Finally, serve something greater than yourself. Marcus ruled an empire, yet reminded himself, what we do now echoes in eternity. Your trades, your work, your wealth, they all ripple outward. The Stoic investor doesn't seek wealth to hoard it, but to use it well, to create, to contribute, to build calm in a chaotic world. If you live and invest with that intention, you win no matter the chart, because meaning compounds faster than money ever can. And here's a practical thought experiment. Imagine you lose everything tomorrow, every stock, every dollar. What remains? If the answer is discipline, focus, acceptance, and peace, then you have lost nothing of real value. That is the emperor's final metric of success. Marcus wrote, "Soon you will have forgotten all things. Soon all things will have forgotten you." He didn't mean that life was hopeless. He meant it was sacred. Because when you realize how brief and fragile everything is, you finally stop clinging to noise. You start living intentionally. You stop fearing the next dip and start appreciating the next sunrise. In today's world of endless alerts and algorithmic chaos, the Stoic lesson feels almost revolutionary. Slow down. Do less but better. Be here fully. When the world screams for urgency, respond with patience. When it demands reaction, respond with reflection. Epictetus said, "No man is free who is not master of himself." Freedom is not found in profit, it's found in peace. And peace, like compound interest, grows quietly day by day through consistent right action. So let's tie everything together. Discipline gave you control. Focus gave you direction. Acceptance gave you peace. And now the emperor gives you purpose. Because all the strategy in the world means nothing without serenity. Think of your life as a long-term investment. Every moment you spend calmly, kindly, courageously adds to its value, and every moment lost to fear or envy subtracts from it. You can't time this market either, you can only live it well. There's a legend that near his death, Marcus Aurelius told his generals, "If it is not good for the hive, it is not good for the bee." He wanted them to remember that individual gain means nothing if it harms the whole. Perhaps the same applies to modern finance. If your profit brings you anxiety, if your success costs you peace, is it truly success? The Stoic investor answers no, because wealth that empties the soul is poverty in disguise. Real success is to walk through turmoil with tranquility intact. So take a moment, now inhale deeply, exhale slowly. Feel the stillness beneath the noise. That is where wisdom lives. That is where Marcus lived. And that is where you must invest next, not in markets but in mind. In the end, the emperor's final lesson is this: markets rise and fall, empires rise and fall, but a calm mind endures all things, and that is the only portfolio worth protecting. So as the credits roll and the charts fade, remember your fortune is not your balance sheet. It's the balance within you. You can lose the world and remain rich if your peace is unshaken, because the market tests your wealth, but Stoicism tests your soul. Thank you for walking this path from chaos to calm, from trading to truth, from numbers to wisdom. Now go and live the philosophy you've learned, not tomorrow, not when the market recovers, but now. Because as Marcus said, you could leave life right now. Let that determine what you do and say and think. So act well, think clearly, live bravely, and invest not just in markets but in meaning. If this Stoic perspective brought you a moment of peace amid the chaos, share it with someone who needs calm in uncertain times. Because wisdom only grows when it's passed on. And if you found value here, if you felt even a breath of stillness while the world rushed past, subscribe to Making Life Better. Every week we uncover ancient wisdom for modern success, turning philosophy into power, reflection into progress, and stillness into strength. Join a community of thinkers, dreamers, and doers who believe that growth begins within. Because the market doesn't just test your money, it tests your mind. And every calm decision you make is one more step toward mastering both. Before you go, comment Stoic if you trade with reason, not reaction. Let's see how many calm minds stand strong in the storm.